Hello, welcome to my channel. And if this is your first time here, please, I would like you to click the subscribe button now. And I will go straight into what I have for you today. Now you have some down payment and you look at your credit and your credit is looking good. What next should you know about before you buy a property? Mortgage. How do you finance the property? Mortgage. Yeah, let's talk about mortgage. I'm going to start with defining the term mortgage and all other terminologies that has to do with mortgage. So when you're talking about mortgage, you understand exactly what we're talking about. Okay, let's go straight into it. Mortgage terminologies. The first one we're going to talk about is the term itself, mortgage. What is mortgage? Mortgage simply means pledge. That is to say, you're pledging a real property to the lender as a security for the money you took from the lender to purchase this property. So usually you're not going to be able to pay the full value of the house. So what you do is you put down your down payment, then the lender gives you the rest of the money to buy the property, and then you pledge this property you're buying to the lender saying, if I don't pay, take this property as your own, do whatever you want with it, and get your money back. So that is what we call mortgage. The next terminology is guarantor. Who is a guarantor? A guarantor is someone that is bound by their promise to make good the obligation of another person to whom they are bound. So when you say someone is a guarantor, it means the person is saying, this guy is owing you, but if he doesn't pay, hold me responsible. So that is what it means to be a guarantor. The next is principal. So what is principal? Principal, whatever you call it. So the principal part of a mortgage is that actual amount that you borrowed from the bank. It could be the first initial amount you borrowed from the bank, or the outstanding balance that you have as a date. The outstanding balance of that actual amount you took, not the whole mortgage. The mortgage is made up of principal and interest. So the principal is that part that is the one you took from the bank. So what is interest? Interest is the cost of borrowing. What it will cost you to make use of somebody else's money is called interest. So when you call it interest rate, it means the calculation of it, which means a percentage of the capital you're supposed to be paying as a cost for making use of this money. That is the interest and the interest rate. So the next thing I want to talk about is the mortgage term. The mortgage term is the length of time or the period that the borrower is committed to a particular lender with a specific interest rate and all its associated obligations. So there's a particular time you're committed to this particular lender and you're committed to a certain interest rate, a specific interest rate you agreed with the lender. That is called the mortgage term. This is different from the amortization period. They are two different things. Amortization period is the length of time it takes you to finish paying off the whole mortgage. Okay, so the next thing you need to know about mortgages is the word amortization. What does it mean? Amortization is the gradual repayment of a loan and the interest portion of that loan on a consistent basis over a period of time by making equal payments that has a mix of both the principal and the interest. So when you make amortization payments, you're paying a specific equal amount, but that amount is made up of both the principal and the interest. So this is a very important part when you're talking about mortgages, okay? You have to know that the mortgage payment you're making on a monthly basis does not translate to equity. Part of the mortgage payment is interest and part of it is principal. What then is equity? In layman terms, whatever the market value of your property is minus what you're owing to the bank, minus what you're owing to anybody that has worked in that property, is what is your own portion. So if you remove everything you're owing from the market value of a property, that is equity. That is what is your own portion as a homeowner. I hope this is clear enough. So if the value of your property is $500,000, the market value is $500,000, and what you're still owing the bank is around $350,000, and some people did some work in this property and you're owing them around $50,000. Your equity is 500 minus 350 plus the 50. So 500 minus 400, it means the equity you have in this property is $100,000. What other terminology do we talk about? Maturity. Maturity. What is maturity? Maturity is the end of a mortgage term. You still remember what mortgage term is? The length of time that you're supposed to be committed to a particular lender with a specific interest rate and all the mortgage conditions. So once that maturity comes, you now have three options. It's either you pay off the lender and you're free from that mortgage, or you renew the mortgage and you're still in business with the same lender, or thirdly, you can actually look for another lender and refinance the mortgage. So from there, we get what we call mortgage renewal, which simply means the process of putting in place a new mortgage with the existing lender. Finally, we have redemption and foreclosure. So redemption is when you get to the end of the amortization period and you clear off every obligation that has to do with this mortgage. You have redeemed the mortgage. You're free. Yay! Okay, and the next and the last thing we're going to talk about today is foreclosure. So when you hear foreclosure, it's not a good thing. Foreclosure is a process by which a lender takes over the property, takes ownership of the property because the borrower has defaulted in the terms and conditions of the mortgage. You don't want this to happen to you. So when we're looking for a house for you, we're going to look for the best fit, what you're able to afford and what you're not going to struggle with, what you qualify for and what suits your needs. So this way, we are not going to talk about foreclosure. Okay, so that is it for today. And please remember to subscribe to this channel, like and share this video. And till next time, it's me, Chinedumo Boruche, a real estate agent here in Calgary, Alberta, Canada. God bless you. Bye for now.